Good one, Coach.
Hi, Warriors. There's some big news out in 15 minutes of BLM, an adjustment on the jobs created, not created next year. That's in about 15 minutes. So there are numbers anywhere from 1 million to 600,000. Some are saying only 200. But let's talk about what's happening in the market. We'll leave that for the reporters. The reporters will, explain after the euro rallies from 107 to, 111 and a half that, signs of economic weakness. They'll give you the reasons for why this happened, but they didn't have those reasons down here, right? When we were doing something or shorting the dollar up here. Now, I do think I have no real divergence signal on the 4 hour. We're confirming lows. And you guys know from Monday, I've been talking about that we should be entering some type of battle zone between 101 and a half and par 50 or par 20 here. So we've gotten to the beginning zone of this. So, I mean, we could get some type of turn. I'm not looking for a reversal in the trend of the market. I'm just looking for the market to find a level to create another bounce. Uh, I'm open to the possibility. I'm positioned. If it wants to just break through par here, par 20, that's fine too. Um, Canada is right there at the 136 level. So from last week, that's a big trade. Um, so, we have a lot of things that support and resistance. Aussie approaching these highs. Great trade from 4.5. The day of the crash, almost 300 pips. The yen is trying to recover. So just be alert for some type of potential dollar recovery. One of the reasons I say it is, yesterday, here's your week in gold. You see the divergence there? I know everyone's bullish gold, and I know that yesterday, in fact, I made a nice call. We sold the opening. Trade was in the room, the idea, and, that's about, I don't know, 20, 30 bucks from yesterday. But the more important thing is that we're back inside of this wedge with all kinds of divergences happening here, with the dollar still not even rallying yet. So I put out this tweet the other day because I think it was really being exemplified in Newmont, I'm sure. And Mike is on this trade too. I said, careful, because, look at this divergence. The divergence was even stronger in the gold itself, but looks like a three driver to me. So I'll say it again. Careful. Can't find a gold bear out there anywhere. So just pay attention to, what's happening there. Uh, Newmont has been a leader. It may sound like the end of the world if we got to break back down towards 40, where I have tremendous confluence, but that would only be about halfway back, right? Say we bottomed around 30, we went to 50, halfway back, moving average, a lot of things coming in here. So I would be careful. And I would say that, maybe the market's worried about Powell not being all doved up for Jackson Hole, or they're worried about this number. But, not a great sign. We're open now. We're lower. It's only 24. But be careful with your miners here. Taking a look at silver, which started to lead the downside yesterday. It's acting better. The gold silver ratio, I think, has peaked. Yesterday, I said, well, maybe we'll have a chance to buy silver at 28, 27 and a half. So sit on your hands, wait for it. This would be a break to buy, just like if the dollar rallied, would be a rally to sell. So I just wanted to update you guys on this. Risk is still acting okay. You know, S&P's over 78% back, and we didn't quite get to 78% back in NASDAQ. You know, I think that there's going to be perhaps at least a pullback towards 55, maybe 54 before we go to 61, unless we're just going to go to new highs this week. That's possible. But remember, when we do go to new highs, which is a possibility I put out a week or so ago, after that bottom, that you had to be aware of the bull and the bear case. And the bull case was a third drive to a top. And that's going to come in probably around where a lot of people are looking for it, right up here around 6,000. So we'll see. We could get one more pullback. And you know what? Anything can happen. I had conviction, and what have I been saying all along? Besides for this break, which I had people positioned for before it happened, let alone the VIX call that went to 60, said, we could go to new highs. I said I would try retracement. I've tried it in NASDAQ with SQQQ. I did it right around the $8 level, 805, and we're 792. Let me fix this. But I could actually see um, SQQ taking out this low. We're about just a little under 78.6 back, so we'll see. I put some SQQ calls on here, and we'll see what happens. Also, um, keep in mind, Mike talked about that people are taking some protection in the banks. There was some put buying in the banks. So XLF is tried to open higher, I think. Let's see. Yeah, so maybe we could get a pullback in the XLF to 42. If it takes out 42, we have something going on, like banking problems. KRE looks. This is the regionals. Doesn't look great. So hope everyone had a good ride in the dollar. It's not over. It's really embryonic, but just like the ocean, waves roll out, the tide goes out, the tide goes in, and this particular tide is running a little long in the tooth. It may have another 100 in it, but I think there's going to be some type of reaction from the battleground. I guess if this was World War One, you would call this par level the Maginot Line. So that's going to be it. And people, once we're under par, will no longer be able to say, well, the dollar's just in a range. So I still like the dollar, could still be good. We could have a crisis and people go the dollar. This is emerging as a long-term signal, and not the beginning of it. It actually started here, and this whole thing was corrective on its way to testing a breakdown at confluence around par 30. We're only 100 away. So be alert, once we're down there, you may want to pair. Don't get rid of all of your short dollar position. Take a little bit off so that if we rallied from down here back to 102, 103, you embrace the rally instead of commiserating about it, because you've put some on. You're still long-term bearish a dollar, and you've rang the register. You put some profits in the bank, and then if we get a reaction, you're recommitting with profits. Your risk is with some of the money you've made instead of principal. So that's my principle today. Try and risk profits rather than principal. Get to that stage in a campaign trade. And also, whether or not Canada holds here at this 136 level, and I hope it does. It's okay if it wants to go, but if it does, I'd be looking at rallies back at 37 and a half to 38 for another sell, because this to me is a magnet eventually on this, because we will not hold this. This has been knocking at this door a long time. There's probably a lot of stops under here, so they could just, I think 80 or 90 was a low, take out the stops and then try and reverse, but not doing anything right yet. But be in the position so that if markets move counter trend, you've put something in the bank and you're ready to take advantage of a counter trend bounce in the dollar. That's my main message. I have an interview with Callum Thomas at Top Down Charts at 3:30 p.m. Eastern Time. Hope you'll join us. Callum's a lead technician. He does a series of charts called Chart Storm. So bring your umbrella and we'll see what kind of chart storm Callum has in store for us a little later on in the day. Remember, don't just count your pips, count your blessings. Adios, dollar bears.